Good day, everyone, and welcome to the QIWI second quarter 2020 earnings conference call. Today's conference is being recorded. At this time, I'd like to turn the call over to Ms. Varvara Kiteleva, Interim Chief Financial Officer of QIWI. Please go ahead.
Thank you, operator, and good morning, everyone. Welcome to the QIWI second quarter earnings call. I am Varvara Kiteleva, Interim Chief Financial Officer, and with me today are Boris Kim, our Chief Executive Officer, and Andrei Protopopov, Chief Executive Officer of the Payment Services segment. A replay of this call will be available until Wednesday, September 2, 2020. Access information for the replay is listed in today's earnings press release, which is available at our investor relations website at investor.qiwi.com. For those listening to the replay, this call was held and recorded on August 19, 2020. Before we begin, I would like to remind everyone that this call may contain forward-looking statements as they are defined under the Private Securities Litigation Reform Act of 1995. These forward-looking statements about our expectations for future performance are subject to known and unknown risks and uncertainties. QIWI cautions that these statements are not guarantees of future performance. All forward-looking statements made today reflect our current expectations only, and we undertake no obligation to update any statement to reflect the events that occur after this call. Please refer to the company's most recent annual report on Form 20-F filed with the Securities and Exchange Commission for factors that could cause our actual results to differ materially from any forward-looking statement. During today's call, management will provide certain information that will constitute non-IFRS financial measures, such as total net revenue, adjusted EBITDA, adjusted net profit, and adjusted net profit per share. Reconciliations to IFRS measures and certain additional information are also included in today's earnings press release. With that, we'll begin by turning the call over to Boris Kim, our Chief Executive Officer.
Thank you, Varvara, and good morning, everyone. Thanks for joining us on this call. Today, I'm glad to share with you our second quarter 2020 financial results. This quarter, we demonstrated robust performance and reached a number of important goals. Our Payment Services segment showed solid dynamics despite challenging market environment and delivered 5% segment net revenue growth. This being said, April and May were the most challenging months for us so far. Our e-commerce market vertical was affected by the cancellation of numerous major sporting events. Our money remittance market vertical was temporarily hit by a decline in various self-employed payment streams. Our physical distribution network was negatively affected by the lockdown measures and temporary retail shutdown that limited users' access to certain retail locations as well as overall activity. However, in June, we started to see strong recovery in the key markets and niches of our Payment Services segment and managed to achieve positive year-over-year growth. Moreover, our B2B projects, including Factoring Plus, Factory, and even QIWI, showed impressive resilience and strong operational performance despite the complicated environment. We believe that the performance of Payment Services business, as well as our other projects, demonstrated resilience of the digital solutions we have developed so far, their value and relevance for our customers. This quarter, we focused on optimizing our operations and loss-making projects. We also prioritized the health and well-being of our employees. Hence, the absolute majority of our employees is still working remotely. I'm glad to note, however, that our business continued to operate smoothly on all projects, including the wind down of Rocket Bank and the sale of Solist, notwithstanding the challenges of their remote work. We strive to further improve the efficiency of our operations across all key segments and projects. Today, we aim to focus on our Payment Services business in order to grow further by targeting our core niches and areas of expertise, creating new use cases well fitted to serve our clients. Simultaneously, we strive to expand our B2B proposition through projects like Factoring Plus and Factory. Having said that, I'm glad to acknowledge that we continue to see many opportunities both in the payment space and in the adjacent markets. I believe we are very well positioned to continue strengthening and enhancing our ecosystem in order to secure our long-term growth prospects. Although the current recovery and performance give us optimism, we remain cautious. We continue closely monitoring the situation across the world and stay prepared for potential negative developments. At the same time, I do believe that we are well positioned to continue developing our business and strengthening our ecosystem to provide our clients in the best-in-class digital solutions. Now, on to some operating highlights. Second quarter 2020 net revenue increased by 23% to reach 6.8 billion rubles, up from 5.6 billion rubles in the second quarter of 2019. The increase was mainly driven by Rocket Bank segment net revenue, as well as by Payment Services segment and Consumer Financial Services segment net revenue growth. Andrei will discuss the performance of our Payment Services segment in a minute, while I'll walk you through the results of our other segments. Rocket Bank net revenue was equal to 509 million rubles for the second quarter 2020, as compared to negative net revenue of 132 million rubles in the second quarter 2019. Such significant growth resulted primarily from measures taken as part of the wind-down process that we are implementing from the late March 2020, including most of the termination of the Rocket Bank loyalty program. Moreover, I'm happy to confirm that we have substantially completed the wind-down process and reached our initial operating targets in terms of the number of clients and amount of client balances. We believe that the termination of the current Rocket Bank services offering will be completed shortly, and the total net loss of Rocket Bank for the full year 2020 will be slightly below our initial expectations. At the same time, we continue to review different ways to reuse Rocket Bank assets. We are piloting certain B2B2C focused products in our Payment Services segment, such as, for example, debit card programs for our partners and the employees earlier developed in Rocket Bank. Hence, the expenses associated with the piloting such products, including predominantly personal expenses, will be attributed to the Payment Services segment going forward. Moving on to another achievement that I wanted to share with you. On July 30, 2020, we completed the sale of our service projects to Sovcombank. As part of this transaction, we have transferred to Sovcombank service loan portfolio as well as certain other assets related to the project. While we incurred a certain pre-tax loss on the disposal of the project, the transaction valuation was significantly better than initially expected. We were able to achieve such impressive results largely because of a better performance of our loan portfolio, including smaller gross portfolio as of transaction date, better collection, and low reserves. At the same time, Consumer Financial Services segment net revenue has reached 437 million ruble in the second quarter 2020, as compared to 283 million ruble for the same period of prior year, driven primarily by higher adoption of consumer paid value-added options, as well as overall growth of the project, including significant increase of the loan portfolio. For the avoidance of doubt, as of June 30, 2020, service project is presented as discontinued operation in our ALphastreet financials. Corporate and other category of net revenue was 496 million rubles as compared to 254 million rubles in the second quarter of the prior year. Category net revenue was primarily driven by factoring net revenue growth to 204 million rubles compared to 53 million rubles in the second quarter of the prior year. Factoring net revenue growth was driven by the scaling of the project, including the expansion of bank guarantees and factoring portfolios. Flock 3 project consolidation starting December 2019 also contributed to the above-mentioned growth. Finally, I'm glad to announce that following the determination of the second quarter 2020 financial results, our board of directors has approved a dividend of 33 cents per share. We remain committed to the target dividend payout ratio at least 50% of the adjusted net profit for 2020, approved by the board in March 2020. The board of directors reserves the right to distribute the dividends quarterly as it deems necessary, so that the total annual payout is in accordance with the target provided. However, the payout ratios for each of the quarters may vary and be above or below provided targets. Despite the challenges we all face today, we continue to see many opportunities, both in the payment space and our key niches, including self-employed and the adjacent markets. We will continue to explore such opportunities and will strive to further strengthen our ecosystem with the ultimate goal of securing our long-term growth prospects. With this, I will turn the call over to Andrei for an update of our payment services business. Andrei?
Thank you, Boris, and good morning, everyone. Thanks for joining us. Moving on to the result of our payment services segment. For the second quarter 2020, our payment services segment volume decreased by 6% to 347 billion rubles, driven primarily by a decline in financial services market vertical volumes, offset predominantly by increase in money remittance market vertical volumes. The volume dynamics in financial services vertical was primarily driven by the decline of our physical distribution network. As Boris mentioned, it was negatively affected by the lockdown measures and temporary retail shutdowns that limited users' access to certain retail locations as well as their overall activity. The growth in money remittance verticals was largely driven by the strong performance of contact money remittance system, primarily resulting from the development of the Tajikistan corridor. As we have already discussed, we started to see the impact of the coronavirus crisis on our key payment categories, including primarily services for betting merchants, in the second half of March. In April and May, our operation across most of our key categories were affected by the COVID-19 and consequent measures to one extent or another. For example, we saw significant pressure in our retail distribution. Other categories, such as travel and ticketing services we provide to taxi companies and drivers, were also affected by lockdowns and other restrictions as well. On the other hand, certain categories, such as, for example, online games and physical e-commerce, were demonstrating strong growth rates during lockdown. However, from end May, lockdown measures started to ease across the globe and some major sport events were restarted. In June, we saw a strong recovery in our key niches and markets, and we continue to see it across most of our key categories. We believe that the performance of our payment services business demonstrates the resilience of our ecosystem, as well as the value and relevance of our digital solutions we have developed to date and aim to develop further. We are taking this opportunity to review and strengthen our product pipeline and extend the suite of services we offer. I believe we will be able to find new niches and enrich our value proposition as a result of this crisis. Going back to the second quarter results. Payment services segment net revenue increased 5% to reach 5.4 billion rubles compared to 5.2 billion rubles the prior year. Payment services payment adjusted net revenue increased 4% to 4.6 billion rubles, up from 4.4 billion rubles in the prior year, primarily due to the improvement of payment average adjusted net revenue yield, resulting predominantly from higher net revenue yield in the e-commerce market verticals, offset by an overall decline in volume. Our payment average adjusted net revenue yield was up by 14 basis points year over year to 1.33%, driven by the yield increase in the e-commerce and financial services market verticals. The yield increase resulted primarily from the change in product mix, with a lower proportion of low-yielding retail cash transactions across most of our verticals as compared to the previous year. Payment services other adjusted net revenue increased 5% to 788 million rubles as compared to 746 million in the prior year as a result of growth of revenue from fees from inactive accounts and unclaimed payments. That was in line with overall growth of our operations. This quarter, we have also seen a decline in the number of active QIWI wallets from 21.8 million as of June 30, 2019 to 20.9 million as of June 30, 2020. We believe that the key factors that resulted in such decline related primarily to the regulatory and operational reasons rather than any substantial changes in the consumer preferences or economic slowdown. Such decline did not substantially impact our financial or operating performance due to increasing diversification of our product proposition and operating model. Our growth this quarter was supported by the robust results we have achieved throughout key products we offer and core categories we serve. Surely, at the moment, we see many challenges ahead and remain cautious. We believe that we are well positioned to continue to grow our business, enrich our suite of services, develop new niches, and create new use cases for our users, merchants, and partners. Simultaneously, we are doing our best to improve and optimize our operations in order to lay a groundwork for the longer-term growth. With this, I will pass over to Varvara for more details on the financial performance of the group. Varvara?
Thank you, Andrei, for an exciting update. Moving on to expenses. This quarter, our payment services business continued to demonstrate strong operating performance and generated strong cash flow supported by the successful completion of the service transaction. In this quarter, we have also significantly increased overall efficiency of our operations as well as our margins through successful divestiture of the key investment-intensive projects as well as other cost control and optimization measures that we have started to implement in the end of the first quarter. Before we move on, I would like to highlight that going forward, I will refer to the segment numbers that include the effect of both continued and discontinued operations under IFRS. This being said, adjusted EBITDA increased 48% to 3.9 billion rubles. Adjusted EBITDA margin was 57% compared to 47% in the prior year. Adjusted EBITDA margin growth primarily resulted from total net revenue growth, underpinned by a decrease in selling, general, and administrative expenses that resulted primarily from a decrease in advertising and client acquisition costs. In the second quarter of 2019, such advertising and client acquisition costs related predominantly to Stories and Rocketbank projects that are being divested in the second quarter of 2020. This was partially offset by an increase in personal expenses, primarily related to the payment services segment personal expense growth, as well as consolidation of Flopter and Rocketbank redundancy costs. Group adjusted net profit increased 40% to 2.8 billion rubles from 2 billion in the second quarter of the prior year. The growth of adjusted net profit was primarily driven by the same factors impacting adjusted EBITDA, offset by an increase in income tax expenses, as well as an increase in foreign exchange loss resulting largely from the ruble devaluation. Payment services segment net profit increased 1% to 3.2 billion rubles, driven primarily by payment services segment net revenue growth, offset by increase in payroll and related taxes, including effect of share-based payments and foreign exchange loss. Consumer financial services segment net loss was 134 million rubles in the second quarter of 2020, as compared to a net loss of 435 million rubles in the same period of the prior year, resulting primarily from segment net revenue growth that Boris discussed earlier, as well as a decrease in selling, general, and administrative expenses, primarily related to lower marketing and consumer acquisition costs, offset by an increase in credit loss expenses, predominantly resulting from a portfolio growth as compared to the prior year. The loss of approximately 700 million rubles that we have incurred in the disposal of service projects did not affect our adjusted EBITDA or adjusted net profit numbers, as it was treated as a non-recurring item in our segment reporting. Rocketbank segment net profit was 44 million rubles compared to a net loss of 511 million rubles in the prior year, resulting primarily from net revenue growth driven mostly by revenue generated from the loyalty program termination, as well as decrease in selling, general, and administrative expenses, primarily related to lower marketing and consumer acquisition costs. Now on to our guidance. Firstly, I would like to remind everyone that at the moment we have limited visibility regarding the potential impact of the outbreak of the COVID-19 strain of coronavirus on our business and operations. In addition, it is currently unclear how much consumer demand will be negatively affected by the outbreak of COVID and what effect such outbreak will have on the macroeconomic environment as a whole. The impact remains uncertain and will depend on the length and severity of the effect the coronavirus has on economic activity in our market. The full scope of the negative impact that the abrupt decline in oil prices and resulting devaluation of the ruble may have on Russian economy also remains unclear, but has the potential to be significant. Our outlook reflects our current views and expectations only, and is based on the trends we see as of the date of this earnings call. If such trends were to deteriorate further, the impact on our business and operations could be more severe than currently expected. We continue to monitor the situation closely. Having said that, we upgrade our guidance in respect of the 2020 outlook. We expect group total net revenue to increase by 7 to 15% over 2019. Payment services segment net revenue to increase by 3 to 10% over 2019, while adjusted net profit is expected to increase by 35 to 50% over 2019. Although we see our second quarter results as a solid foundation for this year, certain other factors remain beyond our control, and we reserve the right to revise the guidance in the course of the year. With that, operator, please open up the call for questions.
Thank you. At this time, we'll be conducting a question and answer session. If you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Our first question comes from the line of Chris Kennedy with William Blair. Please proceed with your question.
Hello, thanks for taking the question. Can you go into a little bit more color on your B2B initiatives, please? Thank you.
Chris, hi, I'm sorry for the radio silence. We're trying to see if the equipment works well, so Boris will take this question. He will talk about...
I'm okay. I was just on mute. Thank you. Thank you for your question. My understanding that your question refers to Phyllocktree and factoring business. Indeed, we consolidated 100% of Phyllocktree in December. And this company is a B2B company which provides the management of customer cycle. It's basically a data company. And what is good about this company that they showed very good results even during the crisis, which is, I would say, more or less obvious because especially during the crisis time, relationship with customer and attracting a new customer and keeping loyalty with old customer is necessary for all the companies, especially in e-commerce segment. The second company in B2B segment is Factoring Plus. They offer structured financing for SME segment. So they work with SME company which works with big companies. So they have some orders from them. They provide with materials or services for big company. And they have two basic products, factoring itself and bank guarantee. Both products demonstrated very good resilience to crisis situation during the first half of the year. And the business model looks very promising. And we are planning to develop the ecosystem for SME segment in this field, providing new products. And so we are discussing like 3 new products which we are going to launch to the end of this year.
Great. Thanks for that additional color. And then just one other one. Can you give an update on the sports betting market? And I understand there's some regulatory changes in the fall. How could that impact your business? Thanks a lot, guys.
Yeah, I will give you a small update regarding the regulation of betting segment, and probably Andrei will give you some more details regarding market itself. You know that we already mentioned that the government was considering the proposals from Boxing Federation regarding the change in regulation of betting market. And according to the media reports, the government has decided to postpone the discussion of these proposals until autumn. The first reaction of regulators and market participants to the proposal was generally negative. As a ground of its proposal, the Federation mentioned the low contributions to the development of sport and the lack of transparency in their calculations. These problems were addressed with the adoption in July of 2 laws specifying the regulation of the industry. They also report in the press about affiliation of the Boxing Federation was on one of the market players, and they have joint projects with Sport Lottery. However, I don't think that it's possible to delegate the regulation of the market under the control of its participants, a private company. Nevertheless, we believe that uncertainty in market regulation has increased, and we will closely monitor the situation. We are also confident that our expertise as super acquirer and issuer of QIWI will be in demand in any scenario, and this will allow us to maintain a significant presence in this market in any case.
Let me add a bit on the dynamics of the market itself. So, as we, I think, told earlier, there was a decline in April and, let's say, to the mid of May. Later on, we started to see the increase of the volumes in June, and the trend continues. And I would say that overall, the summer is very strong for betting, because as the most of the championship and the competitions were stopped for half of the spring, now we have a lot of events going on almost every day. So like these 2 weeks we have a championship league, and the volumes are quite high because we have kind of events really every day. So we will see how it will go after this, I would say, transition period will end, but current trends are quite strong, I would say, overall on the betting market.
Great. Thanks a lot.
Thank you. Our next question comes from the line of Vladimir Bespalov with VTB Capital. Please proceed with your question.
Hello, congratulations on good numbers, and thank you for taking my question. My first question will be on dividends, maybe not for this year, but going forward in general. How you look at this? You have a 50% payout, but if we look at the business, currently it's mostly payment services. It's a good cash generator. In terms of funding, you no longer have Solvency. You are winding down Rocketbank. Factoring is probably the only business, but relatively small, which requires funding. So is there a chance that this 50% payout ratio will be increased going forward and you distribute more cash as dividends? And the second question is on your full year guidance. If I look at the first half and at what you guide for the full year, the second half of the year doesn't look very strong, even though we know that most of pressures were in April and May. So maybe you could provide some color. Are you generally very cautious because there is not that much visibility at the moment, or there are any headwinds that you anticipate in the autumn? Thank you very much.
Volodya, hi. Thank you for your questions. I will take both of them, and Andrei would probably add on the guidance if there is something else. So for the dividends, I want to remind everyone that the decision about the dividend payout ratio is taken by the board of directors annually, and we do establish an annual payout ratio. For 2019, as you mentioned, it's at least for 2020. I'm sorry, as you mentioned, it's at least 50% of adjusted net profit. The payout ratio for the next year, for 2021, will be adopted by the board of directors in March. So as to potential changes to the dividend distribution strategy and higher payouts, that will depend largely on the market outlook at the time when we revert to the decision, on our plans, on opportunities that we see ahead, etc., etc. So we expect, generally speaking, that the payout will not is unlikely to be lower than this year, but to judge on the opportunity of increasing the payout, first of all, as I said, it's up to the board, and secondly, it's too early to give any guidance in this respect. On the guidance question, there are several points that I would like to mention. First of all, we discussed it already, I believe, on our last call. The Q3 of 2019 is a very high base for us. So we expect that the growth for the second half would kind of have a high base effect, and it would be more complicated to show faster growth rates. Secondly, we still don't see how and don't have enough visibility on how the macroeconomic environment, the overall consumer behavior and consumer stance will evolve given all the turbulences, etc. So in this respect, we do believe the second half would have a high base and a complicated comparison for us, but we do believe that there is quite a healthy growth potential. Moreover, I would like to mention one thing you should take into consideration when you're looking at the group guidance, that for 2019 you will have Soviet revenues as part of the top line, contributing to the top line growth, and given that the sale of Soviet was finalized in July 2020, so the base in terms of having Soviet's contribution to the group will also look different for 2019 and 2020.
Yeah, well, I would probably just add here that though we see quite strong trends now, we believe it's not yet kind of the normal pace, because as I mentioned, for the sports betting, we have currently kind of postponed effects, because there was cancellation of events, limited opportunity to play. Now those major events are back, like everyone is excited, etc. So when we will be, let's say, in the autumn, we will see how this new reality is really formed and what will be the trends on this market and some other markets as well. So that's why we are, as Varvara said, on the one hand, looking positive, but still are cautious.
Okay, thank you very much. Very clear.
Thank you. Our next question comes from the line of Andrei Mikhailov with Sova Capital. Please proceed with your question.
Good afternoon. Thank you very much for the call. I have a couple of questions. The first one is on the number of active QIWI wallets. I would be grateful if you could share the dynamics of this metric in July and August, and perhaps also how it evolved in the second quarter on a monthly basis. And I'll ask my second question afterwards. Thank you.
Actually, thank you for your question, but we are not disclosing these numbers on the monthly basis. Overall, I would say that we may continue to see the same dynamics of some decline for the next period of time. For the same reasons that we mentioned in the press release.
Thank you. My second question.
I can just add here that just want to underline that those reasons are partially kind of technical because we have different policy how we operate with non-active wallets, and this has just some technical effect on the numbers. And secondly, what is important is the key use cases that are driving our revenues of the wallet, namely digital entertainment wallets and self-employed wallets, are representing not this big number of wallets. So the dynamics of number of wallets that we are reporting are not really kind of reflecting the dynamics of the volumes and revenues that those wallets are representing.
Yeah, I would probably add that the number of wallets itself is not relevant anymore for our company, because we operate in certain niches. We don't operate in a mass market segment, so we focus on the quality of the wallets and not on the quantity. So we focus on such parameters as lifetime value, business unit economy, and we are trying to enrich our ecosystem with new products like debit cards, which we started to offer to our self-employed and B2B2C segment.
All right. Thank you very much for the detailed answers. Thank you. My second question is on the SME product. You already have the factoring product, and first of all, I'd like to know, if possible, what's the current size of the factoring loan book, and what's the expected size of this loan book by the end of the year? And my second question on this one is, you mentioned that you plan to launch 3 products by the end of the year. Would you be able to elaborate on them? And in particular, how many of these 3 products will have or are expected to have a credit component? Thank you very much.
Andrei, thank you for your second question. So on the loan book size, currently the factoring portfolio size is around 4 billion rubles, and we expect that by the end of the year it will reach between 7.5 and 8 billion rubles. As for other projects that we aim to test, pilot, and probably launch this year, I would say that it's premature to discuss the details. Once we have the pipeline, we would present it definitely to the market and discuss it in more details. But I would say that all of these products are around different types of SME services and based on factoring, executed and developed by Factoring Plus team and based on their infrastructure.
Thank you.
I would add that the portfolio of bank guarantee will reach like 25 billion rubles by the end of the year. All the products I mentioned and Varvara mentioned, they are around structured financing of SME segment. But at the moment, it's very early to discuss it in detail.
Thank you very much. That's clear. Thank you. That's all from me. Thank you.
Thank you. Our next question comes from the line of Andrei Tavlov-Rusnov with Goldman Sachs. Please proceed with your question.
Good afternoon. Thanks a lot for the call and congrats with the strong results. My first question is about the e-commerce segment. Essentially, first of all, if you could give a little bit more color on how the volumes in this market still show very solid dynamics despite the cancellation of major sports events, and what basically helped you to sustain the solid performance, and also what basically drove the yield upwards in that segment. There was a 20 basis points increase both year-on-year and quarter-on-quarter. That's my first question.
Yes, Andrei, thank you for your question. So for the volumes, there are two reasons. First one is that the decline, while we observed the decline in betting volumes, though it was not like dramatic and drastic decline as we told in our previous calls. So because people were still playing for other types of sports and other type of events. Second reason is that at the same time, some other digital entertainment categories, such as, for example, online games, demonstrated solid growth at the same period of time. So overall, we managed to, let's say, keep the overall volume. Talking about the yield, there are two reasons how we managed to grow the yield. First one is the same type of mix effect, because betting is not always have highest yield within the e-commerce category, and some of those merchants and categories that were growing during the lockdowns have high yield versus, let's say, betting, for example, average yield. At the same time, we managed to have lower top-up cost and lower cost of our transactions. Some of this effect was temporary. For example, we have lower cash top-up volumes versus average because of the lockdown, and cash top-up for the wallet is the most expensive top-up. And secondly, we optimized some of our acquiring top-up costs as well. So part of those effects, including the mix effect and the mix of top-up cash volumes, will have temporary effect. So in the next periods, we probably see the numbers back, in terms of the yields, the numbers back to the levels where it was in the first quarter.
Thank you, Andrei. That's very clear. And a couple of follow-up questions, maybe also on the payment business. Do you expect basically the margin in this business to be more or less stable in the second half of the year, or there will be some changes essentially regarding the staff remuneration or other things? And finally, just a small question about your financial services segment. There was also a little bit interesting dynamics with the increasing yield and declining volumes. So maybe you could share some color on that as well. Thank you.
Okay, let me cover first the financial services piece. So it's again this kind of mixed effect. So we have some high volume, low yield contracts with retail partners for the loan repayments, and those volumes were down for the lockdown period because of the lockdown. The volumes went down and the yields were technically up because we did not have those low yielding volumes in this segment. Secondly, we managed actually to optimize at the same time some of our contracts having higher operating yields on those. So probably in this area, we will going forward, we will keep some of this yield effect for the future as well.
Yes, and for the marginality of the payment services business, I'll take that one. So basically, in the first and second half, the marginality of the payment services business included all the additional costs as compared to last year, meaning cash LTI program and certain other costs connected to billing lines, for example, and other projects. On another hand, as we have stated in the press release, certain costs associated with the development of the B2B2C product proposition based on the Rocket and to some extent service systems, they basically will be included as part of the payment services cost, meaning that the margin would probably be slightly lower. At the same time, we do target, and one of the key targets and KPIs that we have is the relationship between net revenue and SG&A, and we aim to keep the net revenue, SG&A to net revenue ratio at a constant level.
Thank you very much. That's very clear.
Thank you. Ladies and gentlemen, as a reminder, if you'd like to join the question queue, please press *1 on your telephone keypad. Our next question comes from the line of Svetlana Sukhanova with Sberbank. Please proceed with your question.
Good afternoon, gentlemen. I'm Varia. Congrats with good results. I got several small questions left. First one would be about Cyprus tax treaty. How will it affect you? Sounds like nothing should be changing for you, so what would you expect? That would be the first question. Then second question would be on FX loss in your payment service. As part of the reason why your payment service margins are down, you quote FX loss. Would appreciate if you elaborate on that FX loss. Third short question would be cash at your balance sheet. I mean your QIWI owned cash at balance sheet. What's the size? And very lastly, when you talk about winding down Rocket Bank, you want to reposition that kind of assets for B2B, B2C product at QIWI. If you can elaborate a little bit about it, I'd much appreciate. Thanks.
Sveta, thanks a lot for your questions. So I'll cover three of your questions, and I'll pass to Andrei for B2B2C and Rocket assets. So for the Cyprus tax treaty, we believe and hope that you are correct. As far as we know at the moment, and as far as we understand the information that's publicly available, public companies incorporated in Cyprus will be able to maintain the 5% dividend tax. However, of course, in order to be sure, we need to see the final documents that would be published, we believe, in the beginning of September. But it's likely that nothing in this respect would change for us, at least for now. As for the FX loss, as you know, when there are significant jumps in exchange rates, we are sometimes subject to FX gains and losses. Largely, that results from the fact that some of our operating companies that are part of the payment services business do operate in other countries and report in other functional currencies rather than rubles. So primarily, this FX losses are simply the revaluation that we do between the functional currency of some companies and the functional currency of the group. So it's kind of dollars to rubles, etc., etc. So I would say that that's primarily kind of a paper account. For cash on the balance sheet, at the moment we have around 5 billion rubles of our unrestricted cash on the balance sheet. Everything else, as you know, is restricted cash, which includes different types of consumer deposits, wallet balances, payables, etc., etc. And I'll pass to Andrei for the Rocket Bank question.
Yes, thank you, Lana, for the question. For the Rocket Bank, what we are currently doing and planning to do. So, as you know, we are working for some time with our B2B partners concerning the payouts to the self-employed, the project like taxi companies and scrap metal pickers. and we target some other audience. And what we were proposing to those companies as a solutions were payouts to our QIWI wallet and to other bank cards. Currently, Rocket has another solution for the same type of customers. So, and with this one, we are proposing to those and other clients payouts to the self-employed to the Rocket debit card with customizable tariffs and loyalty program. So basically, we are enhancing our product proposition to the same or similar type of partners with a new product. We already have some early success with the contracts with construction company, multi-level marketing company, and courier company with the Rocket Bank card. So we will develop it within the payment services, both in terms of the organization and in terms of the business. So currently, already the sales team is one sales team that is selling both Rocket Bank solutions and QIWI payment services solutions.
Thank you very much. It actually sounds to me you're offering pretty much, from the customer perspective, you're offering pretty much the same product as the wallet, just being upgraded to the debit card. Do I got you right?
Yes, but you're right. However, debit cards have, from the consumer side, some, I would say, preference versus wallets, because for some of our self-employed clients and the B2B customers, wallets, let's say, are not enough, and that's why they were asking for the payouts to other bank cards, so they were kind of in need of this product as well.
Very clear. Thank you very much.
Thank you. Once again, if you'd like to ask a question, please press star 1 on your telephone keypad. Our next question comes from the line of Ildar Davletshin with Wood & Company. Please proceed with your question.
Yes, thank you for the opportunity to ask the question. So maybe I could ask also on your non-sort of payment business, the one which wasn't, I think, mentioned in detail today is this Tochka, which turned, profitable. And a couple of questions here. So was this level of profitability the normal one, or were there any one-offs? So can we expect this profitability to continue as we've seen in terms of improving? Maybe there is some kind of idea of where this profitability could reach. I'm particularly surprised that second quarter was pretty weak for the SMEs, yet you were profitable, so that's quite interesting. And then separately, within Tochka, given ALphastreet's plan to divest, as I understand, all of its stake, roughly a third of the company, what would be your joint project Tochka? Would it be affected by this? And given how big impact this plan had, the plan to sell shares they had on your share price, I understand it's not exactly a question to you, but maybe you are involved somehow to find alternative solutions, maybe non-market solutions, like find a strategic partner. Would it be possible, or is it complete fantasy to see as kind of a new partner in your business at some point? Thank you.
Ildar, hi, that's Varvara. So I'll comment on profitability question. I'll pass to Boris for the question on Tochka strategy. And for ALphastreet, I can comment, and probably if Boris wants to add anything on top of that, he left. So I'll start with the last question on plans of ALphastreet. Of course, as you mentioned yourself, we cannot comment on this plan. We don't know what other opportunities ALphastreet is considering, and if they are considering. And of course, they, as the shareholder, have all the rights to basically have any discussions, etc., that they might want to.
but we are not aware and are not in a position to comment on their strategic plan. So for going back to Tochka, for profitability, I would say that throughout the crisis, Tochka performed much better than we expected, and they managed to generate pretty substantial revenues, maintaining a lot of the clients and maintaining high client balances, which we did not anticipate. So I would say that the level of marginality of Tochka was not horrifically affected by the crisis, so they kept a pretty good margin level, and we believe I would say, given their performance so far, we're pretty sure that they will maintain healthy marginality going forward. And as you know, Tochka is not kind of a startup, it's an established business model. Historically, their profitability or their target profitability was, I believe, at the level of about 30-35% EBITDA margin, and I think that's what they're aiming to reach at some point.
Mm-hmm. I would probably make some comments regarding ALphastreet strategy. Well, again, I would say that it's better to ask ALphastreet themselves regarding their strategy. But my understanding that they consider Tochka as a strategic asset for them is they do not plan to get rid of Tochka or to sell it. Frankly speaking, we as well consider Tochka as a very interesting asset for us, and we already have found and trying to find some new synergies between Tochka and factoring business, and between Tochka and payment business, especially in self-employed and B2B to C segments. But at the moment, we are more financial shareholder in Tochka, whereas ALphastreet is a controlling shareholder of Tochka, and this is true. I believe that at a certain point we have to decide, and if we decide that Tochka, which provides now very interesting services to SME, which is very complementary to what factoring is doing for them, because they provide financing, they provide structured financing for SME, and Tochka provides cash and settlement service basically for the same segment. So the synergy could be potentially very high. So at a certain point we have to decide what to do. If buying back Tochka is impossible for us, then we should consider some other options to sell our shares in Tochka and to build similar business within Factoring Plus. But at this stage, it's very early to discuss the details.
Mm-hmm. Thank you very much. And maybe just very quickly on a point that was already discussed previously on this e-commerce vertical, which performed quite robust despite the lockdown. So correct me if I'm wrong, but my understanding was that a lot of this strength was coming from other digital entertainment forms such as games and other things, which in a way were driven by the lockdown. So going forward, the betting industry will continue to be the dominant, something like more than half of your payment volumes within e-commerce category. Or do we actually see new, maybe I'm wrong, and there are structurally a new kind of sub-segments within e-commerce, so it's becoming more diversified going forward?
One moment. We're having a technical difficulty. One moment, please. Please stand by. We're having technical difficulties. One moment. Please stand by. Thank you for standing by. Please continue to hold. We will resume in just a moment.
We were disconnected. Can you please repeat the question?
My question was on the e-commerce segment within payment business. So am I right that your business segment, e-commerce, is becoming more diversified, so the share of betting is getting lower, or was it more the one-off effect from the lockdown in the second quarter? So going forward, the betting will keep dominating this segment.
I would say that it would rather be one effect, as I mentioned, because we saw temporary decrease in betting volume while increasing also temporary in some other categories like online games. So going forward, the structure will be more or less the same as it was before, but we will see.
Yeah, thank you.
Thank you. Ladies and gentlemen, this concludes our Q&A session, and thus concludes our call today. We thank you for your interest and participation. You may now disconnect your line.